Hi folks, I'm Hector Garcia. I'm a CPA. And in this video, I'm going to talk to you about the child tax credit of 2021, specifically the advance payments that are happening between July and December of 2021. This was brought to you by a modification of the tax law via the American Rescue Tax Act of 2021. Now, everything I'm going to discuss in this video, you should be able to find the information directly from the IRS website. If you go to the IRS website, you can click on either Manage Payments and log into your account and decide whether or not you want to get the advances and check what kind of information does the IRS have on you to see if you qualify or if you don't qualify. And if you scroll a little bit down, you can click to Resources and Guidance or the questions and answers, and you can see all sorts of valuable information about the program. However, in this video, I'm gonna try to break it down for you and give you all the information so you understand why you're getting the money or why you're not getting the money. So really quick, who qualifies for this advanced child tax payment? Well, any US person that files a tax return, or even some that don't file tax return, but the IRS knows who you are. If you have a qualifying child with a Social Security number under 18 years old by the end of 2021, you must make less than $150,000 a year, or up to $150,000 a year as a married couple, or $75,000 single. The IRS uses something called modified AGI or the MAGI to calculate that. You can go in the IRS website and find out how they calculate that. But for the most part, it is your income. It's based on your income. Now, earners that make more than this threshold, they can still get a portion of the credit or none of it, depending on their income levels. If they get completely phased out, we will discuss the phase out amounts. Now, how much is the credit? So the entire child tax credit for 2021 has been increased or upgraded from $2,000 per child to $3,600 per child up to 5 years old, and $3,000 per child from 6 to 17 years old. One dependent is your child, but is 18 and more, or turns 18 or more during 2021, they're no longer considered a child for credit purposes. They could still be your dependent, and maybe you'll get something called a dependent credit, which is completely different than this and much smaller. This is really for children, kids under 18 by the end of 2021. So anyway, the people that qualify for the $3,600 per child under 6 will receive half of that as an advance between July through December of 2021 at $300 a month per child. For the people that qualify for the $3,000 per child, these are children between 6 and 17, they would get half of that as a credit between July and December of 2021 at $250 per child. So if you got this random payment from the IRS into your bank account that closely adds up to this $250 or $300 per child, then you know exactly where the money is coming from or how the money came about. Now, I mentioned this earlier during 2018, 19, and 20, before this American Rescue Plan, the regular child tax credit was $2,000 per child. This was already in people's tax returns. The difference is that prior to 2021, or July of 2021 rather, people didn't get the money advanced into the bank accounts. It was calculated at the end of the year with their tax return. So this is why this is particularly different and obviously different than how it used to be done before, because the child tax credit one has been increased again from $2,000 to $3,000 or $2,000 to $3,600, depending the age of the child, and half of it is being delivered monthly from July to December. So in either case, whether you get it in advance or you don't, and you have less than that income threshold, you will get the entire tax credit at the end of the year. Now, what's the payment schedule look like? Basically, the 15th of every month, you should get a direct deposit for these advances, which is approximately half of what you're eligible for. Now, what does a phase out look like, or how much money do you get or not get if you make more than the thresholds? So the original threshold is 75. Okay, let me go back for a second. There's two phases. Okay, there's phase one for the increase from 2,000 to 3,000 or 2,000 to 3,600. And then there's phase two, which is to completely phase out the original 2,000 that you were supposed to get, okay? So the first phase out for the additional 1,600 or the additional 1,000, that amount over $2,000, starts getting phased out at $75,000 a year for single taxpayers and $150,000 a year for married taxpayers. And that phase out goes down by $50 on that credit. You're going to reduce the credit by $50 for each additional $1,000 of income above that threshold. And it's completely phased out at $190,000 married filing jointly, and completely phased out at $95,000 for single. So if you make between $150,000 to $190,000 as married, or between $75,000 and $95,000 as single, you will get a reduced amount of that additional credit that was added during 2021. Now, everybody's supposed to get that $2,000. This is prior to that change. So the phase out for the core $2,000, it starts at $200,000 for single taxpayers and $400,000 for married filing jointly at the same rate. So if you're married filing jointly with, doesn't matter how many kids you have, and you make $440,000, you will get absolutely none of the credit. You won't get the additional amount or that core $2,000 amount. So those are the two numbers that you need to know. Is for married people, $150,000 is the first phase out, and $440,000 is the complete phase out. So any amounts between $150,000 and $440,000, you will get a reduced amount of the credit. Above $440,000 for married, you will get none of the credit. Under $150,000, you get the full $3,000 per child, or $3,600 per child. Let's answer some of the questions that my clients have been asking me, and then kind of go through kind of the frequently asked questions. So number one is, will the IRS keep track of these payments, or will I have to? So first of all, I do strongly recommend that you always keep track of all the money that the IRS randomly sends you, because you want to have an idea more or less what money the IRS has been sending you, period. However, for these particular advance payments, the IRS has committed to keep track of it, send you a letter, what we call Letter 6419, during January 2022, which will show you the entire amount you received as an advance, which you can use to reconcile when you prepare your tax return in 2022. Now, who gets these monthly payments? So as I mentioned earlier, if you qualify for this, you will get it at the end of the year. If for whatever reason you're not getting the monthly payments, don't worry, you will get that money at the end of the year when you file the tax return. However, who is getting these payments now? So if the taxpayer during 2019 or 2020, the most recent tax return they have filed, qualifies based on that income, the IRS will automatically send you that money starting in July, as long as they have your account on file, maybe because you entered it in the IRS website, or you had a previous tax return, or you received a stimulus payment. So again, if you qualified during 19 or 20, whichever your latest tax return before July that has been filed, if you qualified in any of those, you will automatically start getting the money monthly. Again, if for whatever reason you didn't file 19 or 20, or you didn't qualify then, you're not going to get that money, but you will get it when you prepare the tax return if you qualify with your income during 2021. Okay, so that's what that question was answering. So, if I get none of the advance, right, do I still get the credit? Yes, you will put in the tax return that you got none of it, and then in the tax return calculation, whether you owe tax and is credited against that debt, or if it's a refund due, you will add up to that refund again. So again, if you're not getting the money monthly, relax, you will get it next year when your tax return is prepared. Now, what if I'm getting the monthly payments that are less than the qualified amount? You watch this video and you calculate it, you're like, wait a minute, I should get more money than that, but the IRS is reducing the amount because of your previous tax return. That's okay. Just accept or take whatever advance they give you, and then you will reconcile what you received, whatever you qualify for 2021, that will recalculate in your tax return, and that difference, you should get it as a refund or as a payment to any tax liability. Now, what if based on income in 2019 and 2020, you qualified, but in 2021, you don't. So let's say your last tax return you filed is 2020 and you didn't make that much money in 2020, so you qualify. 2021, you got an awesome job. You're making way over the thresholds. You don't qualify at all. What will happen? Well, you will pay that money back. So when you prepare the tax return, it will be shown as a prepayment, as an advance to your taxes, and it will calculate. Now, there's something called a repayment protection for certain taxpayers only making under a certain dollar amount. You can go into the IRS website and read up more about that. But for the vast majority of people that are getting these advances, that 2021 wouldn't qualify because they made too much money, they're gonna pay this back. So be very aware of that. Now, when I prepare my 2021 tax return, let's say I owe tax, I have a tax liability. Will I get a separate payment for the child tax credit after I pay my liability? The answer is no. The child tax credit is calculated in your overall tax liability. So if you get that credit, it would be reduced against whatever your tax liability is. It's all part of the tax return calculation. If you use tax software, it does it for you automatically. If you use a CPA, if you use a professional tax preparer, they'll do it for you. They're not going to miss out. It's part of the regular mechanism. Now let's do a couple of examples. So let's say we have a couple married filing jointly with one child under 3 years old, and they make $150,000 a year. So that couple will get the full $3,600 credit. Half of it in the form of $300 monthly payments will be paid to them from July to December of 2021, and the other half will be credited in their tax return when they file by April 15th, 2022. Let's do another example. Let's say we have a head of household, so a single person with a qualifying child with one 10-year-old and one 12-year-old, and they make $85,000 a year. So if you use the formula with the face outs, you will figure out that the total credit is $6,000 for the whole year. So that person would receive $500 per month for 6 months, and then the balance of the $3,000 will be calculated with their 2021 tax return that they file by April 2022. Example number 3. So we got married filing jointly couple with 2 children, one 10 and one 14 years old, but they make $200,000. So their credit would be $4,000 in total. They will receive $333 per month for a total of $2,000 between July and December, and then the balance of $2,000 will be given to them at the end of the year when they file their tax return. So that married filing couple made more than $190,000 a year. So the additional amount over $2,000 gets phased out, and that's why they're getting just the $2,000 per child. Now, example number 4, same couple now that makes $300,000 a year. The amount is the exact same because the second phase out for a married filing jointly couple starts at $400,000. So any couple that makes between $190 to $400, they're gonna get the full $2,000 per child. They're not gonna get the extra $1,000 or $1,600 that got tacked onto that because they made over the $150, but because they made between $190 and $400,000, they get the full $2,000 per child. So the example number 3 with a couple making $200,000, and example number 4, a couple making $300,000, is the exact same case. If we're talking about single, then just replace the $200,000 for $100,000, just half, and the $300,000 for $200,000. So that gives you a general idea. And then we have example number 5. We have a couple married filing jointly with one 2-year-old that makes over $450,000 a year. They get no child tax credit. They get no monthly payments. They get no child tax credit at the end of the year. So again, I'm going to put a link in the description to the slides. If you want to download them, if you find an error or a correction or something, let me know in the descriptions, and I'll correct the slides for everybody that gets to download them. If you're working with a CPA or a professional tax preparer, you probably don't need to worry much about this. That person's most likely going to do all the calculations correctly. Just make sure that if you do get the advances, let that person know that you got the advances. If you get the IRS letter stating the advances that you got, give it to that person so they know to reconcile it with their tax return. Now, if you want to opt out, you can actually opt out to not get the advances. That is an option. So when you go into the IRS website, and I'll put a link to the description below, there will be a place, there will be a button that says Manage Payments. When you click on Manage Payments, you're going to click on Manage Advance Payments. Click on that, and then you're going to have to create an IRS account, unless you already happen to have an IRS account. But if you don't, you have to create this account called ID.me. You go through a whole process. You have to upload your credentials. Somebody verifies it. Once it goes through the whole process and they verify who you are, you're going to be able to log in and you can opt out and say, I don't want to get the advance payments. That way you don't have the liability of potentially paying them back next year, or you can leave it as a sort of forced savings for it to be calculated with your tax return at the end of the year. So anyway, I hope you found this video helpful. Hopefully it's no longer a mystery why you're getting these random payments. And if you're not getting them and you're supposed to get them, you might want to make sure to look at your previous year's tax returns, see if you filed them and the IRS has actually accepted those returns, and check to see if your income levels match, the thresholds that we discussed. Anyway, I'll see you on the next one.